please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, on to an exclusive news break then. The central government is set to notify the contours of the Air India stake sale plan early next week. Sources also tell us that the government may retain 24% stake in the national carrier. CNBC TV18 Sindhu Bhattacharya joins in with all the details on this. Sindhu, over to you.
Definitely, the contours of the deal are likely to be out early next week, our sources tell us. And in the contours of the deal, the most important part is whether the government is exiting the airline fully. Is it offering 100% or not? Our sources tell us that it will likely retain 24% stake. Of course, this may change, but as of today, this is the position of the government. The thinking in the government is probably that by retaining a stake and gradually exiting the airline, the government is likely to get a far better value for its stake, since the private player is expected to improve the workings of the airline significantly. Now, the other thing that I think a lot of stakeholders would be interested to know is what the government does with the debt, including contingent liabilities. That stands at about 70,000 crore. So that possibly will also get some clarity in the notification that we expect next week. As you know, the government has allowed 49% foreign investment in Air India, which is a sectoral cap, but Air India was different. Government has now allowed 49% in Air India. So this is where things stand. So these could possibly be the broad contours of a strategic disinvestment, which is billed as the largest ever in independent India. Back to you.
All right, thanks so much for that, Sindhu. Well, moving on then, the government hopes to clear all the pending GST refund claims by March 29th after it launched the refund fortnight that started yesterday. That's the comment that came from Mr. Gupta, the Commissioner of GST Policy Cell. Shireen spoke to some of India's top tax authorities at the CNBC TV18 Tax Sutra GST Summit last evening. The main promise from them was to fix all concerns of exporters by the end of this month.
We're given to understand that at the level of the Prime Minister's office, the matter of exporter refund has been raised, and there have been a few meetings that have happened just last week on being able to address this issue. Where do things stand? Because the government says it's the exporting community's fault. They're filling the forms the wrong way. There are concerns that have been raised with respect to how they're filing their returns, etc. Exporters are saying, look, we've been coming to the government and yet our problems are not addressed. In fact, the Commerce Ministry is now taking up this issue as well with Finance as well as the PMO. Where do things stand?
No, as you are aware that 15th today, we have started a refund clearance fortnight, which is up to 29th for 2 weeks. Today itself, we have issued a circular clarifying all these points which were raised to us by the trade and industry. The circular is already available on our website. The problem...
What is the quantum of the blocked refunds today, sir?
Blocked refunds numbers, you know, it would be the total refund claims which has come to us according to information available is about 28,000 crores, out of which about 11,000 crores have already been released.
Okay.
So remaining IGST refund is handling through customs, as you are aware. So there the problem of mismatch in GSTR 1 and 3B is there. Solution has been found. So whatever claims have come to customs and many more which are pending in GSTN, we are trying to get them pushed to customs from GSTN. So we hope that the substantial chunk of this refund claims would be cleared. The problem with respect to ITC refunds was pointed, many concerns were raised. We have clarified about 14 points today in the circular which have been issued, so that the refunds are processed in a uniform manner by the center as well as the state tax authorities. The circular which has been issued clarifies all the concerns which were told to us.
Okay.
So it gives the clear guidelines, what are the documents which are to be seen while processing, what is to be seen by way of declarations which the exporters are submitting, what is to be done in case of mismatches. Everything has been clarified today. And we are hopeful that most of this we should be able to see a marked improvement on 29th.
Now, state-owned defense company Hindustan Aeronautics will open its IPO in today's trading session itself. The price band has been fixed at around 1,215 to around 1,240. Anisha is back with us to run us through her reading of this IPO. Anisha, over to you.
Hi Nigel, good morning. Well, yes, as you mentioned, another 100% government-owned Navratna Defence Company is looking to make its debut on the Lal Street, and this time it is Hindustan Aeronautics, which is the largest defence player when it comes to the production value, as well as it manufactures a lot of components, as well as the aircrafts, helicopters, aerospace structures, etc. Now, the government is looking to offload around 10.2% stake at the issue price of anywhere between 1,215 to 1,240, and looking to raise around 4,200 odd crores, giving it an implied market cap of around 42,000 odd crores when it lists. Now, in terms of the financial performance, it is a defense play, and we haven't seen a very superlative degree of revenue growth coming in from this one, because the revenue growth over the last 4-5 years has just been at a CAGR of 4%. The profit has actually declined at a CAGR of around 5%. A lot of it was impact of the employee costs as well, but nonetheless, the EBITDA as well just grew at a tepid pace of around 8%. If you look at what did well for the company, they have been a lot dependent on Sukhoi Su, which is one of the aircrafts for them. The 44% of the sales was coming through from that. The order book of the company is rather strong, 68,000 odd crores, giving it a visibility of next 3 to 4 years. 67% of it comes from products and around 30% comes from services. The share has been growing in the last few years. It is cash rich. There's no debt on the company. It has been paying dividend over the last 3-4 decades. The near-term triggers as far as two is concerned is the light aircraft and the lightweight helicopters that the company is looking to manufacture. There have been a lot of talks with the government, and this can be really the trigger point for the company. As far as the valuation is concerned, well, if you look at the FY17 numbers, it is not very expensive at 17 times. FY18 looks expensive because the first half hasn't been that great. It is loaded towards the second half. The management has been saying that they're looking at a growth of around 6%. BDL as well did not see too much of a subscription, just 1.3 times. HL as well, we are expecting a tepid kind of response, but of course would be subscribed by around 1 to 2 times. Back to you.
Okay, Anisha, thanks very much for that. Well, time now for some important market opinion coming in from Samir Arora of Helios Capital, who says LTCG imposition warrants underperformance of Indian markets. Sectorally, he says concerns with PSU banks remain while they have hiked exposure in the IT sector.
Basically, in the last month, we got saved a little bit, because on the day of the budget, we became very negative on the basis that this LTCG was a wrong thing to do. Now, since then, because we had shorted and sold or whatever, other things happened like this PNB issue, and then maybe for a few days, global volatility. So in that sense, if you look at it, India has done better than I would have thought, because any one of these reasons could have led to this 7-8% fall in the market. But whatever be the reason now, some part of that has played out. So we go back to being a normal, boring market rather than either a very bad market or a very good market. We also bought 4-5% in IT, which we were zero for maybe 1 year and negative for previous 1 or 2 years. But in general, it is not so much to do with IT. It is to do with the fact that now I feel that there might be a risk on the rupee in general, because, we are not used to having the rupee at the same level for 3-4 years. In general, because of not knowing what to do on this side, we have also a little bit tilted towards IT. I'm not 100% sure in absolute how much we'll make, but relative outperformance could continue for some time till the Indian side recovers. They've also announced, I think whenever they announce on budget day or after that, that all these cases you will have to take to NCLT and give some 180 days, and everything has to be provided upfront, or not provided, but in a sense accepted upfront and recognized upfront. I don't think that our system can also handle, and how many bidders will be actively roaming around day and night. We don't have such infrastructure or capacity to do so many things simultaneously or in a short period of time. Now our net will be something like 47, 48 or something, but we'll go back to the normal 60, but there is no dying rush. If I feel left out of anything, I will cover, but otherwise I am not going to preempt, because what will happen on the day when it goes up 2%, you can analyze what has happened to the world and react. There is no urgency either way, but we are still buying a little bit here and there. Even today we bought, and we are shorting also a little bit here and there.
Well, Manglam is now with us to tell us what he's spotting in the F&O space. Manglam, morning.
Good morning, Ekta. So, yesterday two things really stood out. The FIs, they pulled out about 700 crores in the cash market. At the same time, we saw a similar amount of selling in the index futures too. So those are things that, on a day when the Nifty falls, is something that we really watch out for and gives you an indication of what's happening. The FII long exposure now stands at 52%, and that compares to 55%, which was just about 2 days ago. So we'll keep an eye out on that. In terms of index options, though, yesterday individual data pieces, they were a bit muddled because of the Nifty Bank weekly options expiry. But by and large, we saw a lot of sell-off in the 10,500 call as well as the 10,450 call, telling you that there is some kind of upside pressure. At the same time, the put writers at 10,400, they felt a little jittery, covered some of their short positions as the premium or the 10,400 put spiked. The thing that I'll be definitely watching out for today is a lot of these stocks which have come out of F&O ban. JP Associates tops that list because that stock was up 17%, came out of F&O ban, and later as the markets ended, we got to know from the bulk deal data that investor Rakesh Jhunjhunwala has bought about 3 crore shares. So that stock should be active. Along with that, we have Andhra Bank and IDBI Bank also coming out of F&O ban.
Okay, all right, Mangalam, thanks so much for that. Well, let's get you some trading ideas then. On our bullseye corner this week, we have Richard Jain, Rakesh Bansal and Jay Thakkar. They're battling it out for the strongest portfolio. So let's hear out what they've picked for day 5 of this week.
My first call is a buy call on KPIT Tech. Buy KPIT Tech, stop loss 217.80, target 245. My second call is a buy call on Pidilite. Buy Pidilite, stop loss 883, target 943. My third call is a buy call on Big Block Construction. Buy Big Block Construction, stop loss 160, target 190. My last call is a buy call on Bharat Financial. Buy Bharat Financial, stop loss 1048, target 1125.
First buy recommendation is on CAPF. One can buy CAPF for a target of 669 with a stop loss of 635. The second buy recommendation is on Cummins India. One can buy Cummins India for a target of 808 with a stop loss of 760. The third buy recommendation is on Havells. One can buy Havells for a target of 539 with a stop loss of 509. And the final buy recommendation is on Jubilant Foods. One can buy Jubilant Foods for a target of 2210 with a stop loss of 2109.
Okay, and before we go, a couple of more picks. Richard Jain's first pick is a buy on No Sale with the target of 213, stop loss of 196. Second pick is a buy on Century Ply with the target of 350, stop loss of 325. Third pick is a buy on D-Mart with the target of 1400, stop loss at 1327. Last pick is also buy on TV18 Broadcast with the target of 73, stop loss at 65.5. Okay, and on that note, we're going to wrap up this edition of Power Breakfast. Stay tuned, Bazaar Morning Call coming up just after a short break.